What's up, guys? Mike Sharp here. This is Sharp Investing, and I'm going to talk about PDD, which I have just sold. I didn't sell it because it's not a good business. It's a great business, and I do believe that they're a scaled economy shared business. But the problem is they don't give me much information to go on. They've got, this is not new, but they barely tell you anything in the earnings releases. And the problem for me is that my margin of safety is gone now with the growth rate. So we had a huge growth rate before when I purchased this in, I think it was May 2023. And now that's totally gone. We have 7% growth in the quarter. That's not the first. We've had, I think, 3 quarters now where growth has really come down. And the PEG ratio has inverted. It's no longer at like 0.5. It's like 1.5 now, maybe, kind of thing. Don't quote me on that number. I'm just pulling that out of the air. But we also see operating profit problems. It's down 21% year over year. And, they try and tell us in the calls that that's fine. They're investing in the long-term, high quality growth. That's the high quality growth. They keep saying that, but they don't really say too much about what that means. So there's a lot of trust involved in this company, in this management, that doesn't tell me anything. So like I said, my margin of safety is gone, and I don't really know what to expect going forward, right? So my policy is, if I don't know where I am, I have to sell. And luckily I'm doing that at an 80% profit from where I first bought this. Now I was hoping for more, not expecting. I was hoping for more than that. I thought it was going to be a long-term compounder, but the situation's changed, and I have to adjust. I can't just hold this and just blindly hold and hope that I make money. I mean, hope is not an investment strategy. So I'm just going to go over the list of the problems they're having, and maybe that'll help you with your investment here. I should also say this is not investment advice. This is just me doing videos on my positions so that I can articulate it, and there's some accountability here. So okay, so merchant support program, they talk about this a lot. They're going to invest 100 billion won over 3 years to support their merchants, to go towards high quality. That's fine. But if you break that down, that's 14 billion over 3 years. That should be, 4.5 billion a year in costs that they're absorbing, but their profits are down substantially more than that, and revenues are sort of flatlining here almost. So I don't think that's the whole issue. We've also got Temu growth, which they are subsidizing quite heavily. They're now in over 50 countries, and we don't have enough information to figure out, when that's going to be profitable. How unprofitable is it right now, and what countries are profitable? We don't really know anything. So that's an issue. They're subsidizing shipping and stuff like that right now. So yeah, definitely investing for the future. Probably there's some upside there, but I don't know when, and I don't know how much. That's the issue. U.S. tariffs, obviously, are one of the big ones. They're eating some of the tariffs, so they don't have to raise prices on customers, which is, maybe smart, but that's, you're adding to the Temu losses there. Okay, so, and then we also have competition from like Alibaba and JD, who are cutting costs. So now the original thesis was that, PDD has the cost advantage, so they can absorb a price war. And now that's happening, right? So they're still making money, but if your competitors go to war with you, it means less profit for yourselves. So they're also building out logistics for the future, which costs money. And, all of this said, you have this actually quite big growth in Temu, and should be big growth in grocery, but we're only seeing 7% growth from last quarter too, which is a concerning thing. There should actually be more on the top line than that, right? The problem should be mostly on the bottom line, but right now the top line is the issue. And if I look here quickly, I think that the transaction service revenue actually isn't up that much, and that's the grocery is in that category, right? So it's only up, less than 1% for the quarter ended June 30th. So maybe something has stalled there on the grocery side. And that's not, I don't think that's going to be involved with the sort of merchant. Well, maybe it is because they have suppliers on the grocery side, but they are the merchant on grocery. So maybe they're subsidizing the cost to consumers. So, but again, not enough information. So I've sold this, and I may get back in. It might get back to the point where it's a good risk reward for me, but I'm going to have to see higher growth and or lower prices to increase my margin of safety again. Anyway, that's it for me. Hope you got something for that. Very sorry I'm not holding a PDD with you anymore, but I have to follow my process. Thanks for watching. We'll see you in the next video.